Welcome to another BAR walkthrough video from SuperfastCPA. I'm Logan, and in today's video, we're going to be going over BAR Area 1. This is Section A3. This is an application topic. Calculate fixed, variable, and mixed costs. And we're going to be doing that the SuperfastCPA way, which is diving straight into the questions to learn the material. Now, if you don't know much about our strategies, make sure you go to SuperfastCPA.com and sign up for our free 1-hour webinar training. Again, it is only 1 hour long, and it is free, and we will show you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And after you watch that, you're going to want to learn more. So also check out becoming a Superfast CPA Pro member. Pro members get access to a lot of great stuff, including the full versions of these YouTube videos. So in today's video, we're only going to go over 5 questions, but Superfast CPA Pro members will get access to the full 10-question version of the video so that they can get a little bit more help and a little bit more understanding. So again, if you like this and you like the videos for the other sections, make sure you check out becoming a Superfast CPA Pro member. Now let's dive into the questions. All right, here we are at question 1, and one thing I will say is as we're going through these questions, fixed, variable, and mixed costs, the concept really isn't too difficult to wrap your head around. So these questions probably aren't going to be crazy difficult, but this is kind of a foundational thing that you need to understand because it will help you start understanding other parts of BAR. So that's why we're going through this video, even though it might seem a little bit easy. So let's go through question 1. To begin, one thing I always like to point out is you want to read the last sentence of the question first. This is a very good strategy, especially for test day, because reading that last sentence of the question will frequently give you the context of the question so that you know kind of what you're looking for when you read through the rest of the question. So let's go ahead and do that here. Based on this information, what is the variable cost per chair for direct materials? Okay, so again, imagine you were on test day and you saw that last sentence, you would immediately know you are trying to figure out the variable costs for the direct materials for the chair. Again, that is going to be very helpful as you read through the rest of it. So let's go read through the rest of it. Pelton Company produces handcrafted chairs. In May, Pelton produced 400 chairs at a total direct material cost of $6,000. In June, Pelton produced 600 chairs and the total direct material cost increased to $9,000. So again, based on that information, what's the variable cost per chair for the direct materials? Now, again, this probably won't be too difficult if you think through this, so pause the video, think through this, do the calculation, and when you're ready, come back, we'll look at the answer together. All right, here we are. The answer is A, $15. So that is the amount of variable cost or direct material variable cost in this question. So let's go through it. Variable costs increase or decrease in total at the activity level based on the cost driver changes, but the cost per unit stays constant. The number of chairs produced is the cost driver here. So however many chairs are produced, that's going to be the thing that raises or lowers the total cost. In May, they had 400 chairs, and you take $6,000 divided by 400, and that means that it was $15 per chair. In June, it was $9,000, divide that by 600 chairs, and that gives you, again, $15 per chair, and that matches what we just learned. Variable costs stay the same per unit, but they change as the cost driver changes because that's going to determine how many of the units are produced. Even though total direct material cost rose with more production, the variable cost per unit again remained the same. This consistent per unit cost is a defining feature of variable costs. So again, that was just kind of a reminder what variable costs are. Again, not too difficult of a concept. Now let's go to the next question. All right, here we are at question 2. What is the fixed rent cost per unit in July? So let's go through this. Salter Inc. pays $12,000 per month to rent its production facility. In June, the company produced 2,000 units. In July, it produced 3,000 units. What is the fixed rent cost per unit in July? So pause the video, think about this. Again, we learned about variable costs in the first question. This is fixed costs, something that you probably already know a decent amount about, but I want you to give this a try. And when you're ready, we'll look at the answer together to make sure that we understand what fixed costs are and how they work. All right, here we are. The answer is B, $4. That is the fixed cost per unit. So let's go through this to kind of understand that. Fixed cost remains constant in total, but the fixed cost per unit decreases as production increases and vice versa. Rent is a fixed cost of $12,000 per month. So July, $12,000 was the rent. Divide that by 3,000 units, and it was $4 per unit of fixed cost. Now, again, that would have been different if we were looking at June. June had 2,000 units, so it would have been $12,000 divided by 2,000, giving you $6 per unit. So that is the fixed cost per unit. So the total fixed cost not going to change, but the cost per unit is the thing that's going to change. So it's kind of like the opposite. This behavior is the opposite of variable costs, where the per unit cost stays the same and the total cost changes with volume. That's how variable costs work. Fixed costs work the other way. Total stays the same, but per unit cost changes depending on the production level. So again, we're kind of just learning the basic differences between variable and fixed costs. Now let's go to the next question. All right, here we are at question 3. If the company produces 500 tables in a month, what is the total amount of variable costs incurred? Okay, so again, we're dealing with variable costs. Let's go through this. Brave Co. manufactures custom tables. For each table, the company incurs $40 of direct materials, $25 of direct labor, and $15 of overhead. Of the $15 of overhead per unit, $5 is variable and $10 is fixed. So again, if they produce 500 tables, what is the total amount of variable costs in this situation? So this is kind of taking what we learned in question 1 and a little bit in question 2, but mainly focusing on what we learned in question 1, and you have to kind of apply it over multiple costs. So pause the video, think about this. It's not too difficult. You just have to kind of work through it one piece at a time. And when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is B, $35,000. So that is the total variable cost in this situation. So let's walk through it. Variable costs are those that increase with production volume. So in this case, the direct materials was $40 per unit. You multiply that by 500 tables, and that's $20,000. Direct labor was $25 per table, and that's 500 tables. Multiply that by $25, $12,500. Variable portion of overhead. And this is something that happens sometimes where overhead can be fixed, but some of it can be variable, different things like that. And what I mean by that is rent can be a piece of overhead, and that will probably be fixed most of the time. But then there might be other things like overhead labor that are variable. So that's why overhead can sometimes be fixed or variable. So of the overhead, $5 of it was variable, $5 multiplied by 500 tables, and that's $2,500. So add that all together, $20,000 plus $12,500 plus $2,500 gives you $35,000 of variable costs. Direct materials and direct labor are known as prime costs, and you might very well see that in the exam, like that word. So remember, direct materials, direct labor are prime costs, and the reason they're called that is they are directly traceable to the product and represent the core inputs of production. Like they are the prime costs that go directly into making something. Overhead may contain both fixed and variable components, and only the variable portion is included in this calculation. And again, I talked about how overhead can be either or. So with that, we had a little bit more practice with calculating variable costs. Now let's go to the next question. All right, here we are at question 4. What is the total utility cost for April? Let's go up to the top. Marlowe Co. pays a monthly utility bill that includes a fixed charge of $2,000 plus $3 per machine hour used. In April, the company used 6,000 machine hours. What is the total utility cost for April? This should be very easy, but this is trying to teach us what mixed costs are. So I think you can probably do this. You probably already know the answer, but if not, pause the video, think about this, and when you're ready, come back. We'll look at the answer together. All right, here we are at the answer B, $20,000. So that is the amount of total utility cost here. So this is again trying to show us what mixed costs are. And so we'll just go through it. It sounds exactly like what it sounds like. Mixed costs contain both a fixed component, which does not change with activity, and a variable component, which does. So the fixed portion here was the $2,000. That's like the baseline fixed charge of $2,000. And then the variable portion was $3 per machine hour, and there were 6,000 machine hours, so that's $18,000 of variable cost. So we take those two together, and that's $2,000 plus $18,000, giving us $20,000. And again, that concept probably isn't too difficult to wrap your head around. This cost structure is common in real-world scenarios like utilities, sales salaries with commissions, and maintenance plans. Mixed costs don't behave like purely fixed or purely variable costs. They increase with usage, but almost always start with a baseline amount. So, and again, you'll see this, frequently there might be like a tier, or you might even see this with like maybe a phone bill where you have a base amount, or at least this maybe was how it used to be, where you would have a base amount and then you'd have to pay for extra if something happened. So that's kind of like the same idea. Mixed cost, a fixed portion that is kind of like the base, and then it has variable costs that build on top of it. So again, these are all very simple concepts, but I want to make sure that you understand these basic ideas before we go into any other parts of BAR, because this kind of stuff will come up in different ways as we go through the BAR section. So with that, let's go to the next question. All right, here we are at question 5. Based on this equation, which of the following statements is correct? Let's go up to the top. Malden Co. uses the following cost equation to estimate monthly shipping expense. Total shipping cost, $2,500 plus $4.50 multiplied by the number of units shipped. So based on this equation, again, which of the following statements is correct? Let's go through the options. Option A, the $2,500 represents a variable cost that increases with volume. Option B, the $4.50 represents the fixed portion of the shipping cost. Option C, the total shipping cost is entirely variable. Or option D, the $2,500 is the fixed cost and the $4.50 is the variable cost per unit. Now again, you probably already know the answer just by me reading through those. This is not a very difficult question, but this is meant to teach you an important thing that might come up. So if you already know the answer, great. If not, think about this, and when you're ready, come back. We'll look at the answer together. All right, here we are. The answer is D. The $2,500 cost is the fixed cost, and the $4.50 is the variable cost per unit. Again, that should have made a lot of sense. You probably already knew the answer as I was reading through it, but I wanted to talk about the cost equation and why it's important to understand what we just talked about. Total cost equals the fixed cost plus the variable rate multiplied by the activity level. And that's important to realize in case you see an equation like this and you have to figure out what the variable rate is or what the fixed cost is or what the ending total cost is. These are the kind of things that when you see it in that equation format, if you haven't seen it before, you might get confused. So again, I just wanted to make it very clear that when you see this, the static number is probably the fixed cost, and then the number that is going to increase based on, X number, then that's probably going to be the variable cost. In this case, the $2,500 is the portion that doesn't change regardless of how many units are shipped. That's the fixed cost. The $4.50 multiplied by the number of units shipped, that's the variable cost per unit since it increases proportionally with the volume. So if the number of units shipped was 100, it would be $450. Or if it was 1,000 units shipped, it would be $4,500. So again, that one obviously goes up and down with how much the volume is. So the total shipping cost is basically a mixed cost containing both fixed and variable elements. So again, the fixed cost is probably that static number. The variable cost is going to be something multiplied by X, and the X is going to be the cost driver. And then the total, you can look at it as the mixed cost, which is the fixed plus the variable, and that's the total cost. Of course, total cost is not synonymous with mixed cost, but it basically can be thought of as a mixed cost. So with all that, we learned a lot about fixed, variable, and mixed costs throughout this video. Now, before we do anything else, let's do one more part of the SuperfastCPA CPA process called pillar topics. Now, the idea behind pillar topics is as you're going through the questions to learn the material, you will notice the things that keep popping up in the questions. You've seen 2 or 3 questions trying to teach you about fixed costs and how they work. Or you've seen 2 or 3 questions trying to teach you how variable costs work. Again, these are just the common things that you see popping up in the questions. And as you notice them, you write them down in your own words, again, as the pillar topics. And as you're doing this each day, you are building your own personal repository of the most important things you learned from the questions, and you're writing them out as pillar topics in your own words so that you are ready for exam day because you know what is most important for the exam. So with that, let's go ahead and take a look at the pillar topics for this video. All right, here we are at the pillar topics. Let's just dive straight in. First off, variable costs change in total with the cost driver, but stay constant per unit. Examples include direct materials, direct labor, and shipping costs based on units produced. Again, kind of the prime costs typically are variable costs. Fixed costs remain the same in total, regardless of volume, but decrease per unit as output increases, and the opposite would be true as well. They would increase per unit as output decreases. Common examples include rent, insurance, and straight-line depreciation. Mixed costs is exactly what it sounds like, contain both fixed and variable components. They start with a fixed base most of the time and increase with the cost driver, such as utility bills or maintenance contracts. And then finally, just to make sure it's clear what a cost driver is, we kind of mentioned it throughout the video, but I just want to make sure it's clear. A cost driver is the activity that causes a cost to change. Examples include units produced, machine hours, or labor hours, depending on the type of cost. Again, that's the thing that if it goes up, the variable cost will probably go up. If it goes down, the variable cost will probably go down, and so forth. So with that, we learned pretty much what we need to know for fixed costs, variable costs, and mixed costs for the bar exam. Again, a very simple idea, a very simple concept, but this will kind of carry forward into some other things in different ways as we go through other topics in bar. Now with that, we've done everything in this YouTube version of the video. Remember, SuperfastCPA Pro members are going to get access to the full 10-question version of the video when we post it in the member forum. So if you like this and you like our other videos for bar or for the other sections, make sure you check out becoming a SuperfastCPA Pro member. Pro members, again, get access to the full 10-question version of the video and a lot of other great stuff, including the Pro course, where Nate explains in detail exactly how you're supposed to pass the CPA exams. It's kind of like a much more in-depth version of the 1-hour webinar, so make sure you check out becoming a Pro member. And the best way to become a Pro member or to learn about it is to go to SuperfastCPA.com and sign up for our free 1-hour webinar training. In that 1 hour, we will teach you the key ingredients to passing the CPA exam so you don't waste months or even years of your time failing exams. And then again, that will give you a great path to becoming a pro member of SuperfastCPA. So check the webinar out, check out becoming a pro member. And with all that, I hope you liked the video. Make sure to like it and leave a comment if you did. I hope this video was helpful, and I will see you in the next video.